Hello and good morning, listeners. This is Almus Market Mornings with Shikhar Garg, bringing in the global financial update just for you guys. Talking about updates, the House of Republicans passed the debt ceiling hike with spending cuts in place, but it needs to be seen how it goes with the ruling government. Oil erases all its gains after the supply cut announced, majorly keeping demand concern at the fore, along with the sliding refineries profits doing the trick. ECB balance sheet shrinks, but it's the 2011 playbook coming out for the investors to manage the risk of US debt ceiling. Investors have started considering Asia as a destination for addressing the potential default risk, similar to the downgrade of US credit ratings in 2011. PR, what do you think of the current set of development? How are you expecting the markets to act?
Good morning, everyone. It's basically for me, still the risk aversion part is playing on. And how I do look at it is basically yields on 1 month treasury bill fell more than 20 basis point again to 377. Let me remind again that this is 1 month T-bill, which is 377, where the overnight borrowing rate is 475 to 5% Fed rate. That clearly shows that people are, as of now, the bankers and people or money market funds are basically looking for a time where they want to conserve their cash. The security, which is often seen as a proxy for cash, is most affected by continued standoff of raising the US borrowing limit. Yes, Republican has passed the bill. House voted Wednesday to pass this bill for raising the national debt ceiling. But what happened is four Republicans have voted against the bill. And now it's a 217, 215 Republican taken the bill. They will be negotiating with the White House on the bill because and Democrat will have their own stand on this bill. But overall, US debt ceiling need to be raised very soon. The re-emergence of a First Republic issues and other potential regional banks are certainly causing a bit of flight to the quality. And that's what happening when they are buying a 1 month T-bill. I believe that FDIC, which is basically a guarantee insurance company, weighing the downgrading of a First Republic bank and in their private assessment. If they do that, they may not get funding from the Fed, and that's the reason. Yesterday, First Republic Bank further fell by 30%. If we look at the corporate perspective, what happening is Wall Street equity markets are basically got into push and pull. Uh, Push in a way that there's a good result of a mega tech company. Meta has announced a good number, and the stock was up 12%. The number of Microsoft and Alphabet was also higher than the expectation. That pulled the Nasdaq up by 0.5%, where the frontline Dow Jones and S&P were lower. Now, coming to the geopolitical, what happening is basically South Korean met U.S. President Joe Biden in Washington, and China's Xi, basically he has called up Ukraine Zelensky. Now, this is the first communication between China and Zelensky after 14 months of a Russia invasion. Uh, we don't know what the news would be and what the outcome would be, but definitely Washington liked this call of a China to Zelensky, and that's seen as a positive development. The US also assured that US access to Korean semiconductor through Korea and continuously meeting the South Korean president is not designed to hurt China. And they are basically creating a additional supply for them. Coming back to the currency market, euro actually moved higher one year high, and that happening because of the European economy is doing good, and where in the US the banking contagion is still going on. Yesterday, the confidence index in Germany and the growth numbers have been also revised higher, and that pull up the euro. The rest of the currencies were mainly in the kind of a small range. Uh, uh, Today and tomorrow there will be a monetary policy uh, basically going on. Monetary policy meeting is going in Japan, and that's the first in the under the new governor. We would be waiting for their announcement and see how the market behaves on that. Indian equities were up by 0.25% on a continuous flows, and where the Indian 10-year flat was a flat, there was not much of a movement. INR appreciated by 0.25% on USD weakness. The expected range of a dollar rupees should be today between 60 90, 81.60, 81.90. That's all from me. Thank you.
Okay, PR, that's quite good. But what's very striking for me was the bit wherein we are seeing some bit of risk aversion with the yields falling. But at the same time, we are also seeing cryptos rising. We are near the highs for this particular year with Bitcoin trading above $30,000 now. That's quite interesting of a contrast that we are seeing. But all said and done, the hammering of FRB continues by the investors and the market participants as the participants were seen to have a flight for quality. Apart from that, the tech sector push was somewhat needed by the equity indices as the banking sector concerns were pushing it down. All said and done, the first direct communication was in place on the Russia-Ukraine matter, and it only is to be seen how things evolve on the geopolitical landscape because geopolitics has been one of the key indicators or key factors which has never left the table in the past few months. Lastly, we have the uh, MPC meeting or the monetary policy meeting for Japanese economy by the incoming governor, Mr. Ueda. It needs to be seen how things proceed as there has been a lot of speculation with respect to what will the Japanese central bank do with respect to yield curve control and whether they will go ahead with some change in their policy. Last, we have the GDP numbers being released for US economy today and the inflation numbers tomorrow. There's going to be some bit of action in the currency markets next week onward. So let's brace ourselves for the incoming action and volatility. That's it for today, folks, and we shall come back again. But before that, Pankaj, is there anything you'd like to add?
So two things I just want to add on is on a digital side, cryptocurrency and the precious metals, they are rallying and they are moving higher in anticipation that soon there would be rate cuts. That's one. And the second important development in the month of March, this is basically uh, ongoingly people talking about a de-dollarization. What happened in the month of March? China trade denominated in the currencies like Chinese trade denominated in yuan has overtaken the Chinese trade denominated in dollar. So it was around 48% of China trade happened in yuan and 47 trade happened in the dollar. And that's the first major data point. It's looking like that the China is really considering de-dollarization. That's all from me. Thank you.
Okay. Oh, the de-dollarization is already being experienced by some of the market participants, and the Chinese trade is a leading indicator for the same. But as PR mentioned, the anticipation of rate cuts is probably one of the reasons for this short rally in the cryptos as well as gold. Uh, there's a lot to watch out for, folks, in the coming days. We'll keep updating you. Thank you so much for listening, and we shall come back again tomorrow.